Central Valley Ag ProEdge grain sales manager Luke Beckman is our market analyst this week. According to the latest USDA crop progress report, both corn and soybeans, good to excellent conditions, declined just slightly last week. Corn was down 1 point to 71%, but it's still the third highest rating of the past 5 years. Soybeans slipped 3%, with 67% now in good to excellent condition. That's also the third highest rating in the past 5 years. The report shows 57% of corn was in the dough stage. That's 20% ahead of the 5-year average of 37%. Soybeans are 92% blooming, and that's 6 percentage points ahead of the average. The report also shows 90% of winter wheat harvested. We talked with Luke Wednesday morning about a number of things impacting corn and soybeans, but began by asking for his analysis of the latest crop progress report.
Well, I think, Jerry, with the crop ratings that came out on Monday, I mean, corn was down a point, beans down a little bit more than what they thought. I think the big thing the market's really looking at is the crop report that, would have aired on Friday before we had the opportunity, or shot this before we had the opportunity to see those. But crop ratings in general, I think, will set the tone for what the yields are going to say, in the Friday numbers. And that is that the corn crop looks great, bean crops starting to tail off a little bit, but for the most part, these crops have been in good shape nationally, since they've been in the ground.
And the WASDE report will give us a little better indication on yield.
Yes, as we go forward, every crop report that we see really gets us one step further down the path of price discovery. And we've been using a trend-adjusted yield model up to this point. The August report's going to incorporate some objective data. The September report gets a little bit better, as that information becomes more clear. They get in the field, they start getting ear weights incorporated. You also have the private industry that's going to engage in crop tours. That happens in August as well. So we're a few weeks away from continuing to incorporate better information to give us a better picture of price discovery going forward.
Okay, let's talk about probably the key issue that seems to be having some impact these days, and that is the trade issues. That's affecting a lot of different things, and it's really speculative at this point.
It is. Nobody knows what the next move is going to be in the trade discussion, so it's a little bit fruitless to speculate what it might be. But what we do know is that it is a little bit of a black cloud hanging over this market. And really, Jerry, as we look at what the immediate impact is to farmers, one of them that's coming down the pike pretty shortly is going to be harvest soybeans. Now, it's been well documented that the Chinese are buying Brazilian soybeans at a premium to U.S. values, mostly out of principle probably. But what it's going to do to the U.S. farmer is it's making it very difficult for grain companies to sell any October business, to push soybeans out the door kind of in that October-November period. And so if producers are watching their local grain bids for harvest delivery soybeans, they're probably noticing that harvest soybean basis is weaker than they're typically used to seeing. We would need to see something resolved in pretty short order here to allow the U.S. to start pushing business out the door in October. It does not appear at this point in time that that's going to happen. And so a weaker harvest soybean basis is a reality that we're probably going to experience this year. It has a lot to do with grain companies across the U.S. are going to be forced to store their soybeans when typically they're shoving those out the door in October and November. So weaker soybean basis values for producers off the combine. And if you have soybeans sitting in an elevator that are plugging things up, you have less room to operate and handle corn. So really, if you're a farmer that has to move grain out of the field, you might start to look at basis values, locking in basis values for grain that you have to move out of the field.
And what is this going to do as we look into the future of 2019? Is that going to have some impact if this is still hanging over our heads?
Absolutely. I think there's a lot of things swirling right now, and soybeans really, in the trade issues, certainly create some interesting dynamics as we look ahead. But, we've really been proposing this question to farmers. As you start to look at 2019, if the trade issues in beans are not resolved, and even if they are, the balance sheet really isn't that friendly for soybeans, especially if we have, a big yield. What is the U.S. farmer going to do if November 2019 soybeans are $8 off the combine, and corn is penciling at 350 or 375. What does the U.S. farmer do? We would certainly speculate that the farmer is going to take and put an acre of soybeans into wheat. With what's going on in the wheat market, that certainly looks like a viable option. They're going to take soybeans and put those acres into corn. That looks like a viable option. So you're going to have acres shift away from beans and into other row crops, commodities. And as we talk to producers about that, we really say, is there an opportunity to start marketing your 2019 corn if we expect that corn acres are going to start to go up next year? Certainly very early to talk about that, but as you look at the trade issues in beans and we look further down the trail, it really looks like we have an opportunity to maybe lock in some attractive corn prices for 2019 while futures are trading above $4.
And if this all sort of comes to pass, what does that do? I mean, what's the impact?
Well, I think just that exactly. I mean, I think that farmers can only take the guarantee today. And another question we've probably asked our farmers is, over the past 4 years, what percent of your corn crop have you marketed over $4.10 December futures? And that's not to be demeaning in any way, but it really highlights the opportunity that's on the table today to maybe lock in some of those attractive prices if we speculate that the soybean market is going to be in a little bit of trouble longer term. The trade deal is going to take longer to figure out than maybe what we originally planned. And if that's the case, we go from 90 million acres of soybeans this year, a 10% correction takes them down to the low 80s, maybe pushes corn acres up into the mid 90s. That's not a fundamentally constructive conversation in corn, despite the fact that the balance sheet for corn does continue to look better with a tighter carryout.